Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, 𝗘𝗀𝗓, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, 𝗘𝗀𝗓𝗓.
Welcome in, 𝗘𝗀𝗓𝗓 with Real Estate Radio Live. Thank you again for those that continue to follow the show. We are back on track doing the show once a week. Thank you for all the feedback, the responses we're getting, emails, and some text as well. And a little bit today, I'm going to talk a little bit about the Fed's decision to, again, lower the prime lending rate by a quarter. That just happened today as we discussed this on November 7th, 2024. And then I'm going to talk a little bit about consumer debt being at an all-time historic high. Imagine that consumer debt is at an all-time historic high. And I'm going to talk a little bit and share with you how that got that way and where we're going to go. And what I'd like to do is get a message out to those that are carrying a lot of debt and suggest that you do something sooner than later. I know there's a lot of people that are hanging on and just accumulating a lot of debt, credit card debt, home equity line debt, personal loans, student loans, at super high interest rates. Interest rates, on some of these credit cards are in the 20-24% range. And home equity lines could be anywhere from 9% to 11%, depending on the spread you have on your margin. So I want to talk a little bit about how we got there and then how I would suggest that people start putting the gears into motion right now to try to consolidate some of that debt instead of waiting. So first question, how do we get here? How do we get where we are today with consumers with an all-time high of accumulation of debt? Well, a couple things going on. As much as a lot of people believe and a lot of people are encouraged about the economy and the stock market's at an all-time high and some of the high-tech companies are doing better than ever, behind the scenes, there's a lot of concerns. We're still wondering, is inflation tame? Is it going to come back? Is it still too high? I mean, there's some issues there. Are we moving towards a recession? There's all kinds of, it's just an interesting market, an interesting dynamic right now. So where this started was back in 2020 and 2021. So 2 to 3 years ago, we had this refinance boom, of course, because rates were in the 2-3% range and millions of people took advantage of those wonderful interest rates. And in some cases, many of them still have those great interest rates. And so as times got tough for people, and when people start taking on debt or they're not really quite sure how to handle the debt, what they've been doing typically, a cycle is people would put debt on credit cards, home equity lines. Those are really the two largest things that we see historical data tells us that people accumulate debt, credit cards and home equity lines. So right now, home equity lines could be anywhere from 9 to 11% interest rates on those. And then you have credit card debt that could be, anywhere from 15 to 25% or more. And what's astonishing is people are carrying this debt. They're making those monthly astronomical payments on those high interest rates because they're afraid to touch the loan on their first mortgage. This is not for everybody, but I'll give you an example. And this, if you're out there listening, this is, this represents what you're kind of doing. I would encourage you to give me a call, check in. Let's do a mortgage analysis. Let's do a mortgage coach reset and see where we could do and we could save you money. So this is a typical situation. Someone's got a 30-year fixed and maybe, let's say 3.5% fixed on a 30-year fixed right now. And they're staring at that going, God, I hate to lose that rate. And I would agree, and I would completely get it. But here's what's happened over the last 3 or 4 years. And there's some paralyzation going on. And I think you just need to make the decision and look at it financially. Look at the numbers. Don't look at it emotionally. All right, so let's set this up. So this is what's happening. You have a person that's got maybe a 3 to 3.5% interest rate on 30-year fixed. And this is just hypothetical, but I'm seeing it. There's millions of people in this situation right now. That's why debt's so high. And then they're carrying maybe a $200,000 home equity line of credit that's at 9, 10%, 11%. Okay. Might even have some credit card debt. Some people have, believe it or not, 50, 60, 100, $200,000 in credit card debt. And that could be anywhere from 15 to 25% interest. And they're servicing this high levels of interest rate and debt every single month, paying sometimes thousands and thousands of dollars on this debt. Instead of refinancing, consolidating their first and second and getting rid of that 3.5%. Now, let me just run the numbers for you. And those that are, please share this with others, share the podcast. You guys do a good job at that. Share this with, friends, family members, coworkers, whatever, anybody that's potentially could save some money. Here's where people are stuck. And here's where you should make a move right now. Yes, interest rates are, right around 6.5% or so. Let's just say, give or take, depending on your situation. Let's just call it 6.5% right now. Okay. They came up a little bit. They were down closer to 6% or just below a month or so ago. Now they're back up around 6.5%. They will likely come back down sometime after the first of the year. But while you wait, you're wasting thousands and thousands and thousands of dollars. Let me give you an example. If you have a 3.5% 30-year fixed, and again, we're just doing hypotheticals here. And let's just say you have a $300,000 loan on that. And we'll just make up a payment. Payment's $2,000 a month. Again, I'm just making this up. And then you have a $200,000 equity line in which it's $2,100 a month because you're paying such a high interest rate. And by the way, that payment on that home equity line is interest only. So you're paying no principal on that. Keep in mind. And then you might have some credit card debt. We could wrap all that debt together and you could save yourself, in this particular situation, you could save yourself $700 to $800 a month. That's right, $700 to $800 a month temporarily. Now, here's the catch. Here's a message I want to get across today. If I get nothing else across, let's get this. Don't wait. I know people are going, well, I'd like those rates to come back down to 4 or 5%, Joe. Okay. And they will eventually. But listen, right now, you wrap those loans together. We consolidate the first, second, credit cards, whatever. You save your $700 to $800 a month in this situation. I know it's not everyone, but I could guarantee you, if you have a fair amount of debt on an equity line and credit card or you are going to be saving a lot of money by consolidating, refinancing, paying the credit cards and the home equity off, getting one loan, even at 6.5% or so, you're going to save a lot of money. And I know you're thinking, God, Joe, but I'm trading a 3.5% or 6%. Right. But it's temporary. This is a 2-phase program I want to talk about today. Okay. Phase 1, save your money right now and quit wasting all the money you're making on these payments. These payments are astronomical. I'm looking at people every single day and seeing the money they could be saving because they're so hung up on the 3.5% interest rate. Listen, phase 1, save the money now. We could do this at no cost or low cost. Okay. You save the $700, $800 a month in this scenario we're talking about. You move along. And then let's say next year, the rates come down to 4.5% to 5%. Then you refinance again, either at low cost or no cost. That's phase 2. See, the problem is if you could save $700, $800 a month and you've already been making these payments for a year or so, let's say, think about the money you're spending and wasting when you could refinance now, consolidate, go to the 6.5%, again, just as that example, take all that debt, put it in one loan at 6.5%, save the $700, $800 a month. Next year sometime, the rates are going to come back down. You could refinance again and take advantage of that on a long term. And if they come down again, these are the strategies that I know a lot of people, they'd like to say, Joe, I know about that 3.5%. Right. But think about this. No, really, I want you to hopefully think about this. It's unlikely that rates will ever get to 3.5% again or 3 or even lower, right? We don't know. They could, but it's unlikely in the next couple of years anyway. So in the meantime, you're hanging on to that 3.5% interest rate while you're accumulating really expensive debt. And unless you have a plan to pay that debt off, then this is not going to get any better for you. It's not going to get any better. Now, if you have a plan to pay down and pay off a home equity line and credit cards, then I'd say, great, super. Leave that 3.5% alone, pay those debts down, and you'll be in great shape. But most people don't. Most people don't have the ability to come up with hundreds of thousands of dollars. And by the way, it doesn't make sense to take it out of your retirement or your investments typically to do this. This is the best way to consolidate this debt. The Fed just lowered the prime by another quarter. That's eventually going to have a trickle-down effect. We are going to get lower rates next year. We are for sure. But what if we don't? What if these rates hang on for another 6 to 8 or 12 months? In the meantime, you're paying an additional $700-800 a month minimum in this example we're talking about. I would encourage anyone listening to this podcast, give me a call, 408-838-9060, 408-838-9060. Email joe@𝗓𝗡radiolive.com. That's joe@𝗓𝗡radiolive.com. We could do a mortgage coach analysis for you. We could do an analysis and find out quickly, no cost, how much money can you save and if it makes sense or not. And if it doesn't make sense, then at least you know. And if it does, then maybe you consider it. There are millions of people out there right now servicing such high levels of debt. The only reason they're doing it is because they're thinking that 3.5% interest rate, they hate to get rid of it. I understand. Psychologically, I get it. But the reality is, if you remove the emotions from it and refinance and save the money right now and save even more money a year or so from now, it is a better financial move for you. The worst financial move and decision is to keep the 3.5% and keep hoping something magic's going to happen. And then you accumulate all this debt. So I would encourage you, share this podcast with as many people as you can. I know there's millions of people out there that should refinance, and they're not purely because they're concerned and they're upset, or they're hesitant in getting rid of that low interest rate on the first mortgage. And again, I'll just say it again. I understand. I don't blame you. But the reality is, if you take the emotions away and you look at the numbers, the raw numbers, you're wasting a lot of money each month, throwing money away every single month by not consolidating debt right now. So I encourage you to give me a call, check in, or whoever you work with, doesn't matter. Check in, do an analysis, find out how much money you could save, put together a plan, and implement that plan. It really concerns me that we are at an all-time consumer debt, historic all-time debt. It does. I just hate to see people accumulate all kinds of debt, and we're here to help you consolidate and put you in a better position. So again, this is a quick message today. The podcast specifically today is really geared towards one objective. That is, how can we help America pay down their debt and save money every single month until the rates get better? Don't make the mistake that a lot of people are doing right now and keep hoping that the rates are going to drop to 3.5 or 3 again. They just won't. Take care of that debt now. And then in the future, you could take another look at it. If the rates drop, guess what? You could always do it again. But in the meantime, the mistake a lot of people are making is they're just accumulating and servicing this debt every single month. All right, we're going to sign out and finish up at this time. Again, the message is, if you have any questions about refinance, consolidating debt, reach out, give me a call. You know where to reach me, 𝗓𝗡radiolive.com. 𝗓𝗡radiolive.com is the website. Email joe@𝗓𝗡radiolive.com. That is joe@𝗓𝗡radiolive.com. Or you could text or call me, area code 408-838-9060, area code 408-838-9060. Give me a call, check in, and even if you have some feedback or questions, or even if you have a topic you'd like to discuss, give me a call anytime. I want to thank you again for following the podcast. We're back up to thousands and thousands each month. And it's hard to believe, again, this is over 1,700 shows we have done now in the last 10 or 11 years, and proud to continue that trend and also continue the message, and that is to help people make wise decisions with their real estate and their finances. That's what we'll continue to do. Okay, Joe Cucchiara again with Real Estate Radio Live. Thanks again for checking in. Please be sure to share the podcast and tell us how we're doing. Until next time, take care of yourself.
You've been listening to Real Estate Radio Live. For more information on today's program, visit 𝗓𝗡radiolive.com. That's 𝗓𝗡radiolive.com. Subscribe to our podcast. Discover more at 𝗟𝗡radiolive.com.